Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is February 9, 2023. This is the U.S. Morning Forex Report, where I take a look at the technicals that are driving some of the major currency pairs. So let's get started. We'll start by taking a look at the euro versus U.S. dollar, and we're seeing the that currency pair move to new session highs, as you can see right here, currently trading 1.0787. That is above the 100-hour moving average. That's a blue line in this chart, and also back above the 50% retracement of the 2023 trading range. That took the price up to the high right here. The 50% comes in right here at the 107.558 level. We also have this swing area here that has a number of different swing lows and swing highs going back in time, and we moved above the upper end of that range. It was 1.0775. And getting above that level, the 50%, getting above the 100-hour moving average, getting above the swing area here is all bullish bias here for the pair. I'm going to put in a Fibonacci retracement, measuring the move down from the high that we saw last week to the low that we saw in trading this week, and the 38.2% retracement. If I get rid of this one, comes in at 1.08078. That is just above this next target area right here, which is defined by different swing lows through here. And then we moved to the downside in trading here earlier this week, and maintained resistance against that area right here, leading to the move to the downside. Then we've saw the price move up into our swing area right through here. And now we're approaching this swing area, 38.2% retracement, so on and so forth. So the buyers are making a play in the euro versus US dollar here today. We'll be watching the 107.75 level as kind of close support and trading here today. Don't want to see the price move back below the 60 level, which is the lower end of this swing area, and also the 100-hour moving average, which is still on its way to the downside here. Hasn't flattened in any respect here, but as long as if the price is able to move either sideways or to the upside here, we should see a flattening of that 100-hour moving average, which would give us a nice little support level if you're so inclined to see the euro move to the upside, the dollar move to the downside. We'll see how that pans out, whether the buyers can keep control here, but certainly the buyers are making a play in trading here today. Let's just take a look at the daily chart to see where we stand from that perspective. When we look at the daily chart, we get a broader view, not just of what most recent stuff through here, but going back in time. And if we look at this daily chart, there was a number of different lows and highs through here, where the market found support right here, forming a base over a 2-month period, then broke below that level, and then reestablished resistance against that area right here. That started this yellow area right here between the 1.0746 up to 108.05. It's a pretty wide range here, but as you can see, we're back into that range through here. So watch the 108.05 level on the way to the downside here after moving higher in last month's trading. We did find support against it here, moved higher and then moved below it, and then we found resistance against it on this day earlier this week. So if we move above the 108.05 level, that would be more bullish for the euro versus US dollar. Let's look at that currency pair. Let's take a look at the dollar versus yen next. And the dollar versus yen is also moving to the downside here. By the way, yields are moving lower as well, with the 10-year down around 5.4 basis points currently at the moment. But for the dollar versus yen, breaking through a key level here. The key level is defined by the 50% retracement and the 200-hour moving average. The 200 moving average is this green line in the chart. The 50% retracement is of its move to the upside from this low to this high. Breaking below both those levels is somewhat bearish, and also it happens to be this low right here. The low on the move to the downside here found initial support against a 50% retracement, and then retraced part of that gain. And now we're moving back below the 50% retracement, 200-hour moving average, and this low right here. So bears are making a play here for the dollar versus yen. And as long as the price can remain below the 130.48 level, that increases, keeps the bears more in control. And we'll look toward other levels here. Not sure this level is necessarily in play, but we might look down toward the 61.8% retracement. This area level right here is looks like being tested right now near the 130.37 level. So get below this old high right through here and opens the door for a move toward the 61.8% retracement down at 129.91. But certainly what traders can latch onto is the fact that we broke through this cluster of support near the 130.48 level, and that's now going to be close resistance for you traders in the dollar versus yen in early trading today. You may give up to give it up to 130.60, which is near this low right through here as a resistance level, and also near these highs right through here. That's another key level, a risk defining level here for the currency pair. This too was a cluster of support slash resistance where we had different highs right through here, broke above it, came down, failed on the break below it, and then reestablished support here. So 130.48, 130.60, as long as you stay below that area, that's more bearish for the dollar versus yen. I think that's the best way to put it here for that currency pair from a technical perspective. The sterling versus US dollar, this pair is moving up to a nice key test here with the declining 200-hour moving average coming into play at 121.92. The current price trading at 121.86. We also are trying to move above the 50% retracement of its recent move to the downside right through here. That level comes in at 121.79. And that was also near this low right here where the market bounced and then fell below that level and increased momentum on the break below that level. So watch the 121.79 level as a level of support here after the break as dollar selling continues. Another key level might be this level down at the 121.66 level. As long as the price remains above that level, that's more bullish. So buyers are making a play. We're coming into the 200-hour moving average. We need to get above that. And if we get above that, that opens the door for the upside in the sterling versus US dollar. Finally, take a look at the dollar versus Canada. Why? Because this currency pair is moving down to test its 200-hour moving average once again. In trading yesterday, the market came down to the 200-hour moving average, found support buyers against it, and rocketed back to the upside, nearly retracing the entire move to the downside here. Ups and downs in the dollar versus Canada as it tries to figure out what it wants to do. Break below the 200-hour moving average would have traders looking toward the low price from yesterday. But right now we're trying to hold support against that 200-hour moving average at 133.739 as the dollar moves to the downside. We are seeing stocks move higher. The Dow Industrial Average is up around 250 points as we speak. And the S&P index and the NASDAQ index are also higher in pre-market trading. The S&P is up about 35 points, and the NASDAQ's retracing a lot of its losses from yesterday as well. So there you have it. A look at some of the currency markets and chatters here and there and other little things. My name is Greg Michalowski. Good fortune with your trading. Bye-bye.